Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the Fed's upcoming policy meeting on Wednesday and the potential reaction in the dollar. So, Marios, several weeks ago, at the end of August, the Fed announced that it will be more tolerant of higher inflation. Do you think the central bank will use this meeting to explain its new inflation overshooting regime? And do you think it will also hint at new measures to lift inflation?
Hello, Maria. They will definitely explain their new framework. That's what I believe this meeting will be all about. It will be more of a public relations exercise. And the question is, will they make that new regime more credible by announcing new measures? To which I believe the answer is no, at least not immediately, and I'll explain why. So, first of all, let's start with why the Fed is doing this. The Fed is trying to convince markets that even if the economy improves drastically, it will still not raise interest rates for a very long time. Now, the Fed hopes it will create a sort of positive feedback loop from this. So if investors believe inflation is going higher, that might become a self-fulfilling prophecy, loosening financial conditions, that drives borrowing rates even lower, and that helps the recovery. So that's what the Fed wants. Now, the question is, to convince markets this is a destination, the Fed has to either back it up with action or the threat of action. So this is where this meeting comes in. I believe they won't do anything right now. They'll keep more action on the table. But basically, if you look at the minutes of the July meeting, there was no sense of rushing into anything new. And if you listen to what some officials have been saying lately, the general sense is we'd like some more clarity on where the economy is headed before we take any major decisions. And most importantly, the data have been improving. Consumption has bounced back very nicely. The labor market is recovering. Inflation is already running a little hot. So there's no urgency, I believe, for policymakers to act right now. I also believe that because of the upcoming election, they will prefer to sit back for a little bit, because once the election passes, then you will have a clearer sense, let's say, of what government spending will look like, and that will help them determine how much more stimulus they need to add. So no measures for now, just explaining the new regime and hinting at future measures.
So, if the Fed doesn't deliver any fresh easing signals, what reaction should we expect to see in the dollar?
Well, the rule of thumb would be a stronger dollar and perhaps lower stock markets, because the people looking for that very dovish guidance, those clear signals for imminent easing, might be disappointed. So we might see a spike higher in the dollar, perhaps a spike lower in stock markets, but the trends, I have to stress, are the opposite way. The trends are for a weaker dollar and for higher stock markets, and this Fed meeting is very unlikely to change the broader picture.
Marios, thanks so much. And thanks for joining us at xm.com.